Welcome, Chris, to Ecotech Institute. It's an honor to have you here today. Let's jump in. We have a question from one of our students. The question reads, Chris, do you have a view on what energy source will begin to supplement or eventually take over as the primary fuel source for transportation as oil continues to dwindle in supply? Also, natural gas is often seen as a bridge fuel to enable less reliance on oil. But beyond natural gas, do you see any viability in any other burgeoning technologies or fuel sources?
All energy transitions require many, many decades and many trillions of dollars if left to market forces, and that makes sense, right? As we were moving from wind power to steam power to move ships, as soon as it was shown that steam was much more efficient, we didn't just trash all the wind-powered ships. All the people who own them, that represented embedded capital, so we kept using them. And the internal combustion engine right now is the primary investment, trillions of dollars in that. If we wanted to consider using natural gas as a bridge fuel, we could do that. But just be aware that right now 0.7% of natural gas is used for transportation. It represents a fraction of a percent of our actual transportation system. And we could transition over and use it as a bridge fuel, but we'll have to retrofit all of the existing engines that are out there. Figure out ways that we're going to build pipelines to deliver the fuel, figure out ways that normal people on a Monday morning when they're a little tired can use compressed natural gas without blowing the place up. So we'll have to, come up with all new filling stations. We could do that. The answer is we are not anywhere down that path currently of doing that in this country. We talk about it, but kind of going to wait for companies to do it on their own, municipalities to do it on their own, eventually consumers to do it on their own. And it's going to go very slowly. Now, I want to contrast that with the pace of where we are in the oil story. There have been some very exciting finds in shale oil, but this is just in the United States so far. There are no other countries really prosecuting or anywhere down the path to getting their shale machinery up and running. It's very complicated. It's not simple drilling. It's some of the most complex drilling we've got. It'll happen in other countries. It's going to take time. Now, here's the most important statistic that we've got about oil at this point in time, well, besides the $115 price for Brent crude on the open market today, is this. In 2005, we had about roughly 74 million barrels of oil coming out of the ground on a daily basis. And in 2012, we had about 74 million barrels of oil coming out of the ground, give or take. And what happened between 2005 and 2012? Well, the price of oil pretty much tripled. And the amount of exploration and production spending by the oil companies doubled, went from 300 billion to 600 billion. So in that context, we have to understand that what we've just heard here is that we doubled our investments in oil and gas exploration, and we basically have about the same amount coming out of the ground on a global basis. And it's important to look at oil as a global substance. This is not a story about the U.S. suddenly overtaking Saudi Arabia. All of that, as long as the United States is importing any oil to fund itself, it matters a lot what's happening on the world stage. And the world price of oil is really the one we need to understand. So I look at that data and I say, guess what? The United States, the OECD countries really dropped their demand down a very large amount from 2008 to current. That was entirely soaked up by China and India. And so we have a story on the world market supported by price, supported by volume, that says, for whatever reason, we're spending twice as much over the last 7 years, and we're getting about the same amount out of the ground. That's really what we would predict in a peak oil story that says we're going to be applying more and more technology, more and more investment to basically get the same amount as we bump along that plateau. Now, something big could come along. Maybe Iraq will suddenly settle down, and the oil majors can really invest and get in there and produce another 6 million barrels per day out of that, maybe. But the bottom line is this. The days of cheap oil are over. If we said we wanted oil to go back to $30 a barrel, we could do that maybe, but we wouldn't be drilling a single well in any of the shale plays. Those require a minimum of $50 a barrel at the wellhead, but typically $80 full cycle per barrel in order to justify the investment in those wells, even as they're surefire wells. They're just that difficult, and the amount that's recoverable is that small compared to the investment. So at any rate, we're not going to have $20 a barrel oil anymore, and so the question becomes, what are we going to replace oil with? At this point, the only thing that's viable has to be electricity, but there again, we have extraordinary challenges. We have no way as yet to store electricity that's meaningful. I'm praying for new battery technologies to come along or some other way. There are not many good options for storing electricity, which really puts a dent in the alternative fuel story. If we're thinking about solar electricity or wind electricity, they're great, but they're intermittent. That means we really need a way to store them. Potentially, every single car that's outfitted with a battery could be that storage technology, meaning we have a distributed storage methodology instead of a centralized one that involves some huge giant, batteries or capacitors or whatever we're doing.
Thanks, Chris. It seems inconceivable that Fortune 500 companies are not looking at the resource depletion scenarios that you lay out in your work and making strategies based on this data. The same could be said for most governments, policymakers, and think tanks. Can you confirm this and also explain why the subjects demonstrated in the crash course are not mainstream yet?
China's been out on the world stage buying everything they can possibly buy. They've been stockpiling, it looks like to me, because they've imported more copper than they could possibly use that they need for both domestic and their export market. They're buying coal at an incredible pace. And so China's out there buying assets all over the world, acting as if resource shortages and depletion are going to be very real. I'm not at all sure that the U.S. government has a clear bead on this at this point in time, but I can tell you for sure many corporations are starting to wrestle with this, because even as something as simple as water, Nestle has to look long and hard to find aquifers that are not completely spoken for just to supply the water that they want to use for bottled water operations. These things are a very tight supply right now and expected to grow more so. And it's really the water issue, I think, that's going to surprise most people. The world has been draining some of the key aquifer reservoirs underneath some very, very populated areas, notably in India, Pakistan, China, Saudi Arabia, certain portions of the American Southwest are going to be facing, it's just math at this point. They're depleting aquifers at a known percentage rate, and when those run out, there is no plan B for those regions, and nobody's really talking about that yet from a planning standpoint, and it's mysterious why not.
And Chris, do you think that falls within the 20-year time span that you put out for substantive change?
Absolutely. Absolutely. Some of these things are starting to bite already. China in the last decade has lost a growing area about the size of Saskatchewan because they've drawn down their main aquifer. Used to only be 150 meters down. They've now drawn it to well over 1,000 meters, over 3,000 feet, and they just can't pump it anymore from these depths. And so they've had to abandon farming in fairly marginal areas. They shouldn't have been farming there anyway, but it meant a huge loss of farmable area for China, and they've been making it up by importing. So when China imports wheat or soybeans or corn, what they're really doing is they're importing water. And so that's the dynamic that we're seeing playing out. And so I'm expecting water absolutely to be a factor within the next 20 years, probably within 10 in some regions. But more importantly, I think food is going to be the thing that we're going to actually track that by most obviously.